Welcome everybody to demystifying the home buying process. I'm going to just advance the slide. I'll introduce myself. My name is Jared Earnikel, and I'm a realtor with Re Max Center Realty here in State College, Pennsylvania. Some of my specialties are residential home sales, investment property sales, land sales. You see what my personal brand is, JJE Land and Home. My background's in forestry, and so that's the land sales is just kind of a natural fit for me as one of my specialties. I'm a Penn State grad, and I've lived here in State College, Pennsylvania for about 15 years. And a little quick fact about that photo that you see. First of all of the photos that are on my slides are properties that I've sold. This property is one of the first ones that I ever sold. And if you look real close, you can see there's a dog on the porch there. That was a really cool property. That was that gentleman was a garlic seed farmer, and he had about 10 acres of land that was either greenhouses or farmland. So really neat property. But go ahead, next slide, Josh. Okay, so the power of preparation. So one of the things that we want to really focus on here today is setting a strong foundation in the whole home buying process. But before we get into that, I want to give a quick disclaimer. The purchasing process is very dynamic. It's going to be different for every buyer. And so there's no way that we could fit the entire process into an hour. So we're going to be doing a lot of the highlights. So I would encourage you, if you have questions, to please put those in the chat and we'll try to answer them later. Or if you want to, you can reach out to any of us directly afterwards. We're going to have our contact info at the very end during the question and answer period. And then, of course, if you need to jump out early, throw your email into the chat and then we'll send you a copy of the video and you can watch it later. So back to the power of preparation. First and foremost, we want to understand why. Why do you even want to buy a house? Clarity leads to making wise decisions. So that's what we want to get very clear on, is why you want to actually do this. So one of the ways that I help my clients with this is I have a very detailed buyer questionnaire, which if you want a copy of that, feel free to put your email in the chat and I'll send it to you. But some of the things that are in there are going to be to help us determine what your top 3 needs are. You may have 100 wants, but it's really important that we understand what those top 3 needs are, because those are going to be our guide in determining, what it is that we're actually looking for and how this actually makes sense. So some of the things in the questionnaire are going to be about your timeline to buy, knowing that the average contract is around 30 days. If you're a cash buyer, that could be a lot quicker. But if you're doing something like an FHA loan, VA or USDA, you may be looking at more like 45 to 60 days to close. So understanding all that is going to be super important. We're also going to find out about things with your budget. So there's going to be some out-of-pocket expenses that you're going to need to know about. Some of those are going to be things like inspections and the appraisal. So those are things that you're going to pay for prior to actually getting to the closing table. And then there's going to be costs at the closing table and an actual cash to close that you're going to need. So some of the things that I'll do is we'll go look at the first house and I'll actually do an estimated closing cost for you so that you can look at that and say, okay, I really like this house and this is what it looks like on paper. So that'll help slough out some of the questions that you might have, and it might refine those top 3 needs. Another thing we're going to talk about is lender pre-qualification. It's really important that we understand what that max price is. So I want to find out if you've talked to a lender yet, and if you haven't, we want to make sure that we get that addressed. So another thing that I do a lot, you're going to hear me ask a question. What do you need from me more than anything else? And this is a dynamic question. It's something that's going to change throughout the process, but it's really important that your realtor understands what's going on right now so we can address those needs. Let's see. Oh, one last thing here. Something that I advise people to do is to start a Google Docs folder so that you can start to put things in there. You can start a notes folder so that you can do your needs versus your wants. You can throw important information in there like your appraisal, So things like that, so that you have them quick, all organized and at the ready. So with that, I'll hand it off to Josh. He's going to talk about, well, he's going to introduce himself, and he's going to talk about the different lenders and the pre-approval process.
Thank you for that, Jared. So yes, my name is Joshua Pake. I am a loan officer here with CoLab Lending. I am licensed in Pennsylvania and North Carolina. My specialty is residential mortgages, and I've been a resident of State College for about 9 years now. I'm originally from the state of North Carolina, which is why I have that license as well. Just a little bit about us here at CoLab. We are a mortgage broker. So what that means is we work with a variety of lenders, which we can then kind of shop around and see who's got the best rates, terms, and service for the type of loan that you might need specifically. So when you're looking at buying a house, you of course are most likely going to need financing. So with financing, there are different kinds of lenders. Primarily there are banks and there are mortgage brokers such as ourselves. So with banks, that can be a common place to start with. Most of us, if not all of us, typically use a bank for checking, savings accounts. So when you have an account already with a bank, it can be easy to go to that bank since you have that established relationship and say, can I qualify for a mortgage? And then they can look through the options that they have specifically available, and then they can advise you of that. For us, as a mortgage broker, we work with a variety of banks. So the comparison there is that instead of working with one bank that may have great rates, you can work with a mortgage broker and shop around with several banks that have great rates and great programs and services. One thing I'll say for us as mortgage brokers is that we're a little bit more flexible. And what I mean by that is that for some banks, they have minimum credit scores, which we'll get into here in just a few minutes. But if you don't qualify with a bank because your credit isn't strong enough, that's where a mortgage broker can come in, because we have lenders that can work with lenders that banks deny. And so we can come in and still help those people become homeowners by offering them additional loan programs. Ultimately, it pays to shop around and compare. Sometimes your local bank is going to have the best rate and terms for you. Sometimes the mortgage broker is going to have the best rate and terms. So it really does pay to shop around and compare, to get a couple of different offers and see what's out there, because that's where you're going to get the best product when you do that. Now, when you are getting pre-approved, that means that you are getting the green light to be able to put in offers on houses. Ultimately, when a lender is going to loan you a large amount of money, they're looking at 4 things. Specifically, they're looking at credit, income, assets, and property. Now, what are those terms? What are those words? So credit is basically your history of repaying money that you borrow. And that's where all of us typically have a credit score. When we've taken out a student loan, a car loan, a credit card, and we borrowed money and then we paid that back, we then get a grade, like a score of how well we did, as far as, did we make that payment on time? Did we borrow money and then pay it all back? Did we borrow an excessive amount of money? Do we have a lot of loans? Do we have a small number of loans? All those things kind of establish this credit profile, this credit history. What that basically provides to the lender is it answers the question, is this candidate likely to repay the loan? Because that is a question that all underwriters are asking of borrowers. Loaning a large amount of money obviously is a risky endeavor for banks, so they want to do due diligence to make sure that that money is going to be returned in time. With income, they want to know if you have the money and the monetary sources to repay the loan. So not just your ability to in your history, but will you have the income itself? Income could be Social Security. It could be your full-time job. It could come from several other sources, a retirement account that you're drawing on. And with income, they're going to document that history with pay stubs, W-2, so that they can see the history that you've had specifically over the past 2 years. For assets, they're asking, okay, they've got the credit. We know they repay the money they borrow. We know they bring in money to repay the money they borrow. Do they have the money in the bank to actually cover a down payment or closing costs? So with assets, they want to look at the funds you have available in checking, savings, an investment account, a retirement account to see if you have the money available to make this purchase. Because with any home that you purchase, you're going to have closing costs. Some loan programs require a down payment. Some loan programs do not require a down payment, but all of them do have closing costs. So they're going to look to see if you have those funds available. And then lastly, they want to also then look at ultimately in underwriting itself, which we'll get to, does the property qualify? And without getting into too many specifics there, basically is what you're buying a property that they could easily sell again to someone else. So does it have electric? Does it have heat? Does it have water? Does it have bedrooms, a bathroom, a kitchen, a roof? So if you were looking at, say, a hunting cabin, those are hard to find financing for because many hunting cabins don't carry electricity. They don't have a permanent source of heat. So most banks and lenders will say no to providing financing for that type of property. But your normal house that you're going to be living in every day should meet all of the requirements to qualify as collateral to help secure the loan. So when you're house hunting, you want to get pre-approved for a mortgage. Some people go to the realtor first, and then the realtor will get them pre-approved with the lender. Other times people come to us first and get pre-approved, and then we connect them with a realtor such as Jared. Some advantages to getting pre-approved is that we can provide you with those cost estimates that Jared spoke about. So we can give you a breakdown of what your estimated monthly payment would be for a specific property. How much cash would you need to close on that property? We can help you then figure out how much of your budget can you set aside for a housing payment? How much do you have available for closing costs? And then when you have that pre-approval and you've done that homework of getting some cost estimates, it allows you to move faster when houses come available in the market so that you can submit offers and be first in line to have your offer accepted. That way you're not wasting time getting pre-approved, getting cleared by a lender while other people are getting in line ahead of you, putting in offers on that property. And then during this time, after you get pre-approved and you're given the green light to be submitting offers on houses, you also want to start at least doing some basic research on who you want your homeowner's insurance to be with. Because ultimately, when you close on this property, if you're smart, you're going to secure it with some homeowner's insurance, which will protect the property and protect your investment in that. You don't have to get the insurance set up right away. You just want to at least get an idea of who would you get your homeowner's insurance through? Would it be who you have your car insurance with currently, or would you get some quotes from some other places and see who can provide you with the best homeowner's coverage? So with that, I want to turn it back over to Jared, who can talk more about the property search.
All right. Thank you, Josh. So now we're getting into some of the good stuff here, the fun part. This is what most people think about when they think about buying a home. Even people who aren't looking to buy a home are sitting, in their armchair at night scrolling through Zillow or Realtor.com or something like that. So this is an exciting part. But what I'll tell you, it's not the most exciting part. The most exciting part is when you're going to the closing table, when you get to talk to Brandy. So, but to double back here real quick. So the first thing is getting set up with some level of a property search. A lot of you already probably have that in place. Like I said, a lot of people already do their own property searches. I suggest people to use Realtor.com a lot. It's just very easy to navigate. You can set up a search. It'll send you properties as they come on the market when you know your parameters based off of the questionnaire that I talked about before. But if you don't feel like doing that, your realtor certainly can set you up with a search, which will do the same thing. It'll send you properties as they hit the market. So a couple of do's and don'ts in the property search process. So do stick to your lender's max price limit. When I first bought the home that I'm still in, I remember I was looking at things that are $20,000 over my max limit. And I had to have somebody smack me and bring me back to reality because it wasn't going to work. So you want to take that seriously and just stay within that, because you don't want to waste time and think that you can make an offer on something that's just not going to work. And then you also want to stick to your monthly budget. Kind of a rule of thumb to think of here. You'll hear a lot, 25% of your take home monthly income. That's where you kind of want to be with your mortgage payment. And then also use your whys to set a timeline and urgency. And I see that, okay, well, I had a picture in there I was going to refer to, but there it is. So for example, with this home here, this is a 3-bed, 2.5 bath, around 1,700 square foot home with a 3-car garage on 3.7 acres. Beautiful home. It was built, I think, 4 years ago, great condition, turnkey. The owners took really great care of it. Well, if your timeline and urgency is such that you need to get into something in 45 days, you don't have time to wait around for that specific property to come on. If that's what you think you want, yeah, maybe it'll be there, but you got to be prepared to know that that might not come up. So understanding your timeline and your urgency is very critical. So you do want to stick to that and not let yourself get hung up. Otherwise, you might end up disappointed and having to make other decisions that are less favorable. Like I mentioned before, start a Google Drive folder. You can start a docs folder that will have your needs and your wants in it. You can throw things in it like the inspection report, the appraisals, your W-2s. It's an easy way to send stuff over to Josh when you need to. So this is a little quick tip on that. And then this is really important. Don't get emotionally attached. There's so much that can go wrong. You're not at that excitement time yet. Remember, you got to wait for Brandy to be excited. But there's, for example, some things that could happen. You could get into a bidding war and your offer doesn't get accepted. That could be a real letdown. So get excited, but not overly excited, because there's a lot of things in front of you still. Other things that could happen, you could go through the inspection process and things come up in the inspections that either you just don't feel comfortable with or that the seller's not willing to negotiate with you about, and the whole thing falls apart. So there's a lot of things that can go wrong still. And then Josh mentioned this before, don't move too fast or too slow. So especially if it's a very competitive micro market, which I'll touch on a little bit later, you want to make sure that you're well prepared. You've got your pre-approval. You've got everything in place. You know exactly what you need to do. You can make offers and you get that showing schedule quick. So, and just understanding where you're at with that. And then don't feel like you have to see every property. It's going to be tempting, but it's going to be a waste of time. There's a lot of things that you can be doing with that time that are better served. So let's see, I think that's it for this slide. I'm going to advance to the next. Okay, so congratulations. Your offer is, you found a property and you're ready to make an offer. So just a quick recap. So you've laid a solid foundation at this point. You figured out what you want to buy and how you can do it. And you've done the searching process and you've found a property you're ready to make an offer on. Stay calm and carry on. Remember, we don't want to get overly emotionally attached to anything still at this point. So the offer process, what's included in your actual offer? You're writing an offer. What does that mean? So in your offer, you're going to have things like the agreement of sale, which I'm about to go into some detail on. You're going to have a pre-qualification letter from someone like Josh. You're going to have the signed and initialed seller's disclosure. Some other things that might be in your offer are the deposit money notice. We'll talk about this in a second. That's to tell you where your earnest money is going to be held. You might have a love letter in there. I personally don't suggest that people write love letters. You tend to the line of discrimination sometimes with those. So if you do want to do the love letter thing, make sure that you talk to your realtor, have them read it, and make sure that you are not putting yourself in a bad position. So in any event, let's talk about the fun stuff, the agreement of sale. And a little disclaimer on this real quick. This is all relating to the Pennsylvania Association of Realtors agreement of sale. So just want to be specific about that. So this is your actual offer. This is the meat and potatoes. So it's going to have things like your purchase price. It's going to have your earnest money deposit outline. So what is your earnest money deposit? It's your skin in the game. It's your way to tell the seller, you're serious about this. You're not just going to walk away. And if you do walk away in default of the contract, they have a right to your deposit potentially. You're going to have your deposit protected in a number of ways. We'll talk about that in a second here, but that's what your earnest money deposit is. So there, you're going to have a time is of the essence clause. So that real quick is a way that your offer is essentially voidable. So you're going to give the seller a time frame in which they have to make a decision whether they want to accept that offer or not. And if they don't accept it within that window, well, the offer may still be good, but it's your choice as to whether or not it is. It's voidable by you. It's going to have the closing date. So it's going to have the suggested date for settlement and possession. That's when you would take over ownership. And it usually can happen on that date or before, depending on how everything comes together with financing and everything else. It's also going to lay out the inclusions and the exclusions. So inclusions a lot of times include the kitchen appliances, sometimes and oftentimes the washer and dryer. Those are things that the seller agrees to leave in the house. Exclusions might be, let's say the seller really likes their chandelier. Well, they better put it in the agreement of sale if they want to keep it. It's got to be in that exclusions part. So if it's not in the agreement of sale, it's not in the deal. That's the important thing with those. So, so how is your earnest money deposit protected? There's two really big contingencies that protect it, as well as some that Brandy will talk about with title. But the two big ones are mortgage contingency and a due diligence contingency. So the mortgage contingency is obviously revolving around the financing aspects. There's a lot to that one. When you get there, talk to your realtor, talk to your mortgage originator about that. The due diligence contingency, this is inspections, and we're about to get into detail on that. A question that I get a lot on this is, do I have to waive inspections to win a bidding war? Short answer is no, not necessarily, and then maybe. So when we hear the word market thrown around a lot of the time, and a big question is, what market? What are we talking about? What's the market? Well, just to kind of pin things in here, let's call the market Center County. That's the market that we're going to be referring to here. Within that market, there's a bunch of little micro markets. So depending on the type of property that you're looking for, type of price range, all of that's going to determine, you know, the type of competition that you're going to be up against. Some of them are going to have very heavy competition. There's still some sturdy bidding wars out there for certain properties. Others, not so much. Quick kind of rule of thumb on that: properties that are turnkey, pretty much ready to go. Maybe you go in and change a paint color or something like that, but for most intents and purposes, they're ready to go. Those properties tend to be the most competitive. Properties that need a lot of work, or maybe even just, you know, some significant work, those properties tend to not be quite as competitive. But again, there's dependencies within that too. So there's no solid answer there. It's going to be a property by property thing. So, but your realtor will be able to go through all that with you and explain it in the moment.
And Jared, real
slide.
quick, can you
Sure.
just explain for our listeners what the definition turnkey refers to?
Oh, well, yeah. So turnkey, think of it, turn the key, walk in and go lay down on the couch. Well, maybe you got to bring the couch in, but but yeah, the house is pretty much, it's in good shape. There's not a furnace to replace or a boiler to replace. The roof has another 20 years to it. You know, all the major things are ready to go. You're not going to have to put a lot of money into it. Maybe a couple $100 or even $1,000 or $2 here and there. But for most intensive purposes, it's turnkey. And thanks for asking that, Josh. And that actually reminded me, for the due diligence contingency, there's a window of time with that as well. Typically, we're looking at around 10 to 20 days, depending on what you're doing. If the property has a well, you might ask for more. Depending on the type of water test that you get. Lead tests take a while to get back. So, you know, you might want to plan on 30 days even for some of them. Now, obviously, that could weaken your offer, so that's something to consider. But certain tests take longer, so you need more or less time. So that's one tactic for tightening your offer up and getting inspections included in the deal, is reducing maybe the line items that you have in there and reducing the window of time, and that way you still get your offer accepted. But to answer your question, Josh? Great.
Yes, it does.
All right, I'm good. Next slide. Oop, I think you went one too far. There we go. All right. Congratulations. Your offer was accepted, and now you're going to have the property inspected. What does that mean? Well, let's talk about some of the actual inspections that you could have done. You could have a home inspection. That's where you go through the house in very good detail. So you're going to look at all the mechanicals. You're going to look at all the big ticket items like the roof, like I mentioned before. You're going to look at the foundation. You're going to test outlets. You're going to test the water. You're going to test, flushing the toilets, and, making sure that everything is working order. And if it's not, it's going to get checked out. So you could also do a pest inspection. You can do a radon inspection. If it's got a well, it's advised that you do some level of a water test. If it's got a septic system, I always recommend that you do a septic test. I won't use the words that I say, but that's not a very good problem to have. So you want to make sure you check that septic system. Some other things are, depending on the property, maybe it's a larger property and you're not sure what's going on with the boundaries, or maybe you see there's like some level of potential encroachment going on. You just want to get some confirmation. Maybe you do some level of a survey. And there's again, I'm not going to get into the weeds. There's a lot of different things that could be revolving around the survey. But in this case, if you elect that inspection, that cost is on you. But there's potential ways that the seller could be responsible for paying for some level of surveys. Maybe Brandy will touch on that, but if she doesn't, just know that when you elect this, that cost is actually on you. But there's another one called deeds, restrictions, and zoning. Let's say you want to run a bakery out of your kitchen. You want to make sure that the zoning is in a way that allows you to do that. Well, this will give you a time frame to look into that. All right, so now we know what inspections we're going to have, and you've got them all scheduled up. What I like to do is, even before I make the offer, I'm already on the phone to inspectors and I'm finding out who's got what availability, so that we don't have any hangups and we know what's going to happen. And I'm going to suggest that you actually go to the inspections. So we're probably already going to have that all figured out. What works best for you, what availability the inspector has, so that you can actually be there. You want to be there because it's an opportunity for you to learn a lot more about the house, and the inspector will give you some helpful tips as well along the way. Now, well, I'll say each inspector is different. Some of them are more than happy to have you follow them around like a little puppy, and they'll chit chat with you and answer questions as they go. Others don't want to be bothered. They want to go do their job. And at the end, they'll allow you to ask questions. They'll give you a debrief, and then you can ask some questions at that point. It just depends on the inspector. But after they're done, within about a day or so, usually it's a pretty quick turnaround. You will get a very detailed report of their findings. And then with those findings, you're going to, I grabbed the wrong one. Anyhow, I'll figure it out here. So with that, once you have the findings, now you know what you can look into. So you're going to potentially have another assessment done by an industry expert. So that could be an electrician. Maybe there was a question mark that came up with the electrical box, the panel box, or some wiring in the house. Maybe you get a general contractor, because there's a number of different things. You want to look at the roof, you want to look at this and that, and the general contractor maybe has a good understanding of all of those things. Maybe you get a structural engineer. There was something going on with the foundation or something. With that, the caveat I would say is that level of inspection is something to do very lightly. You definitely don't want to mess around with structural things, but at the same time, you don't bring a structural engineer in for everything. There's a cost. Usually they're going to charge an amount to come out and do their assessment. But at the same time, you don't want to make the seller nervous either. So make sure if you're electing that, if you're getting a structural engineer to come in, that there's a really solid reason. And usually the inspector will have pointed that out. And then once you've got all your assessments, you'll do what's called a buyer's reply to inspections. And this is kind of the final negotiations to the inspection process where you'll hammer out all the details. So within that, there's basically 4 different things that you might do. You might just accept the property as is. You looked at it, you saw the inspection report, and you're like, well, a lot of this stuff is kind of small. We kind of expected it. Yeah, maybe there's this one thing, but it's not really that big a deal. We could maybe figure that out ourselves. Or if not, maybe it's a small item for us. We're just going to accept the property as it is. Maybe there were some bigger things that came up and you want to address them. So you can address that through potentially a price change. Maybe you want to do it as a seller credit. That way, a seller credit that comes off the top of the sale, and that's money that you get to keep in your pocket essentially, and you can use that to fix whatever the line item is that came up. Or maybe you ask the seller to fix it. Usually you don't ask the seller to fix things unless you feel very confident that it's something that they would do in a way that you would feel comfortable with. Let's say the seller is a contractor and you know them and you know that they are a good, honest person and you trust them. Like, oh, just let Joe fix that. I know he's a good guy. He's going to do it the right way. But if you don't know these people for anything, you might say, you know what? They're moving out. We're the ones moving in. We want to make sure that we're in control of how this work gets done. So you might not want to elect the let the sellers fix it option. And then once you've come to all those conclusions where everybody's in agreement as to how to move forward, you sign what's called an addendum to the agreement of sale, and you wrap up the inspections and you got a big weight off your shoulder. You're happy and you're ready to go, and you move on into the rest of the transaction. And that's where I'll hand it off to Josh, where he's going to talk about the loan application process and underwriting.
Thank you for that, Jared. And those inspections really will provide a peace of mind to you as the buyer, because it helps you know that what you're buying is good and it's not going to be a house that you're going to regret buying ultimately. So once you are under contract and you have that signed sales agreement between you and the seller, that is when it's go time on the lending side. So for us, we would take that sales contract and we would then get your loan registered and locked with one of our lenders. So at that point, we could get some of the initial terms locked in, whether you're doing a 30-year fixed mortgage or a 25 or a 20-year fixed. We can get your interest rate locked in at that point. Or in some cases, if we think the market is going to get better, we could start by floating your interest rate and still get some of the initial underwriting done. And then when we get your loan registered and we get those terms initially selected, we'll also send out your initial disclosure. So you'll get a whole bunch of documents by email where it'll go through all of the terms of the loan as is currently being offered to you. You'll get an estimate of what your monthly payment's going to be, what your cash needed to close is going to be. You'll get all of the terms of the mortgage as far as all some of the legal contract piece of it that you can just basically go through and you initially sign. And then from there, we submit your loan application into what's called underwriting. So underwriting is where the lender will go through and actually review your loan application. They'll review through all of your supporting documentation. So they'll look at the income that you claim you're making, and then they'll review your pay stubs and your W-2s to see if those documents support the income that you have listed on your application. They'll look at your assets. So they'll look at the bank statements, the statements from your retirement account and your investments to say, okay, do they really have 40,000 in this account like they say they do? And they just want to basically cross their T's and dot their I's to do that due diligence to make sure that what you're telling them is true, because a lot of times, unfortunately, there is a lot of mortgage fraud that happens in the world today. And so during this underwriting time is when things like your appraisal and your title and your homeowner's insurance are going to get ordered. Now, what are those things? The appraisal specifically is where a licensed inspector will go out to the property and he'll do a walkthrough and just basically determine the value of the property. Now, this inspection is separate from the inspections that Jared was referencing. Those inspections are looking at different components of the home, whereas the appraisal is just looking at the value of the home. So one of the things that he's going to do is he will go through the home and then he will do some research to see, okay, this is a 3-bedroom, 2-bath house in State College. What are some other similar 3-bedroom, 2-bath houses that sold nearby, and what did those sell for? And then he'll basically determine the value of the home so that then you know, are you getting something comparable to what you put your offer in on? Say you put in an offer for a house and you put in an offer of 250,000. You ideally want that appraised value to come back at 250,000 because that means you're getting your money's worth. In the instance where a house appraises for more than what you're purchasing it for, say you put in your offer for 250 and the house really comes back and appraises for 280,000. In that instance, you are gaining some equity. You're still purchasing it as though it's 250 and your terms are still going to be based off of that, but you gain some additional equity, in this case about 30,000. But if the appraisal comes back lower, if you put in an offer for 250,000 and that appraised value only comes in at 200,000, well, that means the house is really worth 50,000 less than what you're offering for it, which opens up a can of worms, if you will. At that point, if you find yourself in that situation, you can go back to your realtor and to the seller and try to renegotiate the price for that house and see if they'll change based on the value of that report. You can try to find some other comparable properties to say, no, we think the house really is worth 250, and these are some houses that sold nearby that support that. Or the other option then is you say, okay, I still want to buy this house. And at that point, if it appraised for less, the lender is only going to lend based off of the appraised value because that's how much the house is really worth. So in that instance, then you would have to bring that difference, which is where it becomes problematic for some borrowers. So if you had that offer for 250 and it appraises for 200,000, then you're going to have to bring that $50,000 difference and then still put a down payment and closing costs on top of that. So that's where you have to work through those numbers and see, do you still want this house? Can you still buy it if it appraises for lower than it does? Usually I would say it's not going to be nearly that big of an appraisal gap. We're talking much smaller differences, maybe 5, 10, 15,000 at most. But just want to throw that out there that's why the appraisal happens, so that you know what the value of that home is. And then when you're in underwriting, this is also when your homeowner's insurance is going to be ordered. So when you close on the property, which Brandy will touch on here in a little bit, you want to have your homeowner's insurance be covering the home from day one. So as soon as you close on it, you want that homeowner's insurance to be effective. So you need to, for us and as a lender, we help provide documentation to your homeowner's insurance provider so that they know the type of home you're buying, what the roof is made out of, what some of the features are in the home, so that they can determine how much coverage it needs. And then they can have that policy be drawn up and ready to go so that it gets paid for and is effective on the day of closing. So while you're in underwriting, you'll be asked to provide maybe some additional pay stubs. And you might think, well, I already gave some pay stubs. Why do I have to give more? Generally speaking, lenders are going to ask for any documents that you've gotten in the last 30 days. And with pay stubs, they want to see that you're continuing to work on your job, that you're continuing to earn your income. With bank statements, they want to verify that you still got the funds in your bank account. So they'll ask for additional bank statements. They'll ask for additional pay stubs so that they can make sure that those things haven't changed. With bank statements, something silly that may pop up is if you get a bank statement, some statements have like a blank page on like 2 of 4 or page 3 of 4 or page 4 of 4 will just be left blank. And so you might think, well, that page is blank, so I don't need to worry about it. So you send pages 1 through 3. But when the lender gets your bank statement, he's going to see, okay, page 1 of 4, page 3 of 4, page 4 of 4. Where's page 2 of 4? Why is that not included? And the lender's not going to know that that page is basically left blank, or that is like a worksheet that you can use to balance your checking account. They won't know that without getting page 2 of 4. If they could, then they probably are psychics, and I would be asking them for lottery tickets if they could do that. So they'll ask for all of the pages to a bank statement. They'll ask for a pay stub that shows not only your hourly and your breakdown, but it'll also show your year-to-date details too, because they want to match that up with what you have on your application. And then lastly, before I turn it over to Brandy here, a couple of do's and don'ts while you're in underwriting is keep working at your same job. You want to keep your income the same through closing until you at least get to the keys to the house. And then from there, if you want to make changes to your job, you're welcome to do that. You also want to keep your funds set aside for closing. So if you know you need $20,000 for a house, you don't want to go spend $5,000 on a vacation before you close on it. You don't want to go buy furniture before you close on your property. So do keep working your same job. Do keep your funds that you need set aside for closing. And don't change your job. Don't quit your job. We've had people do that and then they get denied on the day of closing because they quit their job, so they don't have the income to repay back the loan. And don't take out another loan for someone else or for anything else. Don't take out a car payment. Don't finance some furniture. Don't co-sign a loan for someone else, because when you do that, that could affect your ability to get the loan for your house. Those additional debts will change the what's called the debt to income ratio, which a lender is going to look at. So that debt to income ratio is basically they're looking at how much income do you have versus the things you have to pay out each month. And do you have enough space in there to pay a mortgage payment and still have money left over for your cost of living, groceries, electric bill, etc. And they want to make sure that a buyer's not overextending themselves and getting to a point that they won't have the money to pay back the things that they have. So don't take out any other loans. Don't take out any new credit cards, cars, student loans, etc. Just say no to all of those things until after you close. And with that, now, as I touched on before, title is another piece that happens in underwriting, and I want to turn that over to Brandy.
Thank you, Josh and Jared. So like this webinar, as you see, I don't come into, there's a lot of other things that have already been done. You've been best friends with Jared, you've been best friends with Josh, and now I come in and you're like, who am I? So we come in, we are behind the scenes. We will get the agreement of sale once you have talked to Jared and Josh. Shortly after everything's been signed by both you and the seller, there is a requirement within the sales contract that it should be sent to us within 7 days. And usually that's sent right away so that we can get the ball rolling on our side. So a little bit about Universal. We have been in business since 2005. I took over the ownership in 2011. We have offices in, our main office obviously is in State College, but we have offices in Altoona, Lewistown, and Muncie. But we can close anywhere in the state of Pennsylvania. In person, or if you are buying a home in State College, but you are currently in California and cannot attend closing, we can make arrangements to make that happen as well. So any property that you're purchasing in the state of Pennsylvania, we can do the closing for. If you want to flip for me. There is, I always say, this is the universal difference between us and other title companies. So you can use, a lot of people are like, oh, I have to use an attorney because that's what everyone used way back in the day. There was not such a thing as title companies. So before title companies became a thing, it was only attorneys doing closings. We are different in the sense that we do not charge junk fees. So we don't charge you notary fees, overnight fees, doc prep fees, settlement fees. None of those get charged. We will work, our customer service, I feel, is the best. I can say that, I guess. But we have 21 people here that every single one of them work on the file. So if you would call in to a law office or even another title company and say, I want to talk to someone about my file, and that person was out, you will not be able to get an answer until that person returns. Whereas here, every single person has worked on it and knows a little bit about it, that if that person is out and maybe they do have that answer, someone else within Universal is going to be able to answer it for you. So
And Brandy, can I just say it's extremely stressful when you call into the attorney's office and you can't get an answer.
yes.
And that's what I love about Universal.
Thank you. Josh, you could flip again. Go ahead.
1 second, it's just not, there we go.
Frozen. So what is title insurance? A lot of people don't understand that there's three main people in a transaction. Obviously, if you're inspectors, your homeowners insurance agents, and homeowners insurance is separate from title insurance. But the lender, you have Josh, Jared, the realtor, and then you have the title company. And a lot of people don't realize that there is a separate person handling the title part of it. You are really involved with Josh and Jared a lot throughout the transaction, and we just pop up out of nowhere after a sales contract is signed. So we've kind of taken the approach that we want to get way more involved than most companies do, just because you're going to be the one that's handing the money to me at closing, and I don't want you to come to closing and be like, who are you and why am I giving you all my money? And I've never met you, never talked to you, never got an email from you. So we've kind of taken a different approach than most title companies. But what is title insurance? Title insurance protects you from any loss into a real estate transaction that could have been found or discovered by a title search, or even in some cases, if there was something that wasn't recorded properly, that's what title insurance covers. So there's two types of title insurance, and you will see this on a buyer's estimated closing cost. You'll see it on the settlement disclosure, that there is a lender's title insurance policy, which obviously when you're working with Josh, the lender requires a title insurance policy. So that protects the lender's insurance in the property, meaning if something would happen and you have a mortgage for $150,000, and let's say the seller comes back and says, someone forged my signature on that deed that is not my signature, and files a claim, that's when title insurance would kick in. Well, you bought the house for 150, you got a USDA loan, and the loan amount's 150,000, and you have no equity in the home, but the lender is on the hook for 150. So that title insurance policy for the lender kicks in and protects that lender on that 150,000. Now, let's say you bought a $150,000 home and you put down 75,000. Well, now you have that amount of equity there. So you would obviously get an owner's policy as well. And just because you're buying a property for 150 and getting a loan for 150, you pay on that mortgage. So that loan amount goes down, and whatever you pay off is the equity in the home, and that owner's policy will protect you. So you pay off that mortgage and you're sitting there, and one day, because it's happened, so I can use this as an example, you got a knock on the door, and that deed, the seller comes and says, I didn't know that my mother sold the property, and I was on the deed as well. And that wasn't my signature on the deed. 21 years later, this person did that. And supposedly is claiming a forgery to the deed. Title insurance then kicks in, and our insurance company, which we underwrite for three major insurance underwriters, they will then fight on your behalf. And that is obviously attorneys, that this is all they deal with is claims. And that cost is covered by title insurance. So you're not out of pocket for anything when it comes to an attorney trying to fight for your rights in the property. So if you want to flip again, kind of went over this, sorry, jumped the gun, go ahead, one more. So 10 of the most common title problems, kind of went over this, but errors in public records. So what does that mean? So for example, the other day we had a search come in, and the sellers, they had it was owned by, I'll just use my name, Brandy McCauley, but the mortgage that was filed under Brandy McCauley, but my last name was spelled wrong. So instead of it being MCAULAY, it was filed in the county as MCC. And when you do a title search, you're searching by the name of the owner, and that mortgage was missed because that mortgage was under MCC, not MCA. So that this is probably one of the most common ones. That's why I think we have it as number one that happened. try to work really hard with sellers to go over, hey, do you have a mortgage on this property? Do you not? And if they say, yeah, we do, but our search is not saying that there is one, then we start going through and digging any possible misspellings of that name. A common name that was misspelled on one of the searches, Smith, they flip-flop the I and the M, and a mortgage was missed on that. So those are things that do pop up a lot, because the recorder of deeds have to index every single party to any document that comes in through the recorder's office. And obviously we're all human, we all make mistakes, that stuff happens. Illegal deeds, which we've gone over, missing heirs. So maybe a deed was signed off on 5 heirs, but there was a 6th, which we've seen, and that would come back, and title insurance would cover that. Forgeries we've talked about. Unknown easements, encumbrances. If there was an easement that we didn't know about, let's say a right of way that was recorded, but obviously not recorded properly or not discovered, that would be something. Survey boundary line disputes. So this is something, Jared, I know touched on this, surveys. So in the state of Pennsylvania, a survey is not required in order to transfer property. So there is a section in the sales contract where you can opt to have a survey or you can waive it. I would say, what, Jared, 99% of the time buyers waive that, one, because it's usually between $3,000 and $6,000. And it just, the return, like, it takes so long to get a surveyor out. Am I correct in that percentage? Probably.
Yeah, probably. And you're also correct about getting a surveyor out.
Yeah.
It's not quick.
Yeah. So a lot of people will waive that. However, one thing that we've kind of started doing a little bit more is, if there is a lot of land involved, if there is something that just doesn't look right, like the legal description is really, really old and we just can't tell by the legal description because it goes from a tree to a fence, and then there's to another tree to a rock, which we see in legal descriptions. And then there's all these out sales, and we can't, like, the legal description makes it look like there's 4 acres, but the tax assessment office only has it as 2. That's a problem. There's a difference of 2 acres, and that's a lot. We had one in Indiana, actually, PA, over during COVID. Obviously, surveyors 7 months behind, couldn't get a surveyor to go out there, waive the survey. 87 acres was what he was told. The seller told him that's what was listed. No issues. 7 months later, he got that survey, 55 acres, and the house wasn't even sitting on the property. He waived the survey, so he had to get an attorney involved. That is still an ongoing thing. So, but those are things that is a common title problem, but the only way to be protected is by having a survey in that situation. Otherwise, title insurance will not cover survey. Undiscovered wills, again, that would be something that we talked about. And then obviously forgery. So if you flip to the next one.
Yeah, so once we get through all of the underwriting, the title pieces completed, and they've got all the title and the legal pieces set up for the home to be transferred from the seller to you as the buyer, and the lender has reviewed through all of your documents, your pay stubs, your bank statements, your application, your IDs, they'll give you those 3 words that everyone in real estate loves to hear, and that is clear to close. It is music to our ears. That's the green light. That is saying the lender is agreeing to do it. That you can then get your closing actually finalized and scheduled. You may have had a date in your head, before this, but now you can officially get it scheduled for the day and the hour of when you're going to show up for closing. And then your final numbers can get determined. So what that means is everything will get balanced with title and the lender. And on the real estate side to determine how much cash you need to bring to closing, and then who all needs to get paid out of this transaction. So all of that gets finalized so that then you know the final number of what you have to bring with you to closing. And then when you have that clear to close, that's also when you can then get your utilities switched over. So you can call the electric company and say, hey, I'm closing on this property on the 7th. I'll need the electric switched over to my name on that day. And you can do that with the water. You can do that with any other utilities that are in place on the property that you're taking over into your name. And then from there, it goes really back over to Jared, who's going to speak on a few other things that happens when you get that clear to close.
Yeah, thanks, Josh. So congratulations. We made it to the final steps here. I won't go into too much detail on some of this because Josh just touched on it. There's a few things to wrap up here. The last kind of 3 days. So you're going to review a couple of final documents. You're going to review the Alta settlement statement and the closing disclosure. Those are two separate documents. The closing disclosure is more for your eyes, the buyer. That's going to have all of the loan details in it, your purchase price, your loan amount, your interest rate, your monthly payment. It'll also have the closing costs and the cash to close, which will also be in the Alta. The Alta is an itemized list of closing costs, and it has basically all those closing costs that were loosely referred to in the CD. So with me, I hand the Alta off to my transaction coordinator, and she'll go down through that document with you in detail to help answer any questions, explain things. She does a great job with that, so that you understand what to expect with the actual closing day from the finance standpoint. And she'll also make sure you understand what type of a check you need to get made out and how much to have it made out for, because you'll take that to closing, which Brandy will talk about here shortly. Then the final walkthrough. Now, this is where that heart starts getting pumping. Now you can start to let those emotions fly, get a little excited. We're just about there. Now, I would warn you, not there yet, but we're almost there. So typically this happens about 48 hours to 24 hours prior to closing. Sometimes it's literally an hour before closing, depends on how close the property is to Brandy. And you're basically going to go through the property and you're going to make sure that all the terms in the agreement of sale were met. If there were things that were agreed to that the seller was going to remove or leave, things like that. The house needs to be in broom swept condition. They don't have to do a deep cleaning, but they need to, have it all cleaned out and kind of ready to go. And then you're just going to check the basics that everything's working, like the water, the heat, the AC, flush the toilets, stuff like that. Just make sure everything looks good. And then you get back in the car and you run over to Brandy, and now's when the real excitement happens and you go to the actual closing table. Off to you, Brandy.
So during the time, I know Josh and Jared touched on this, but when Josh said he got clear to close, that's when we started actually coordinating more with Josh's team and the closing department, as well as Jared, just to making sure that we have all the numbers from all parties. We prepare the Alta settlement statement. The bank actually is the one that will prepare the buyer's closing disclosure. That does actually get sent to you 3 days in advance. However, for any first-time home buyer that's watching this, that 3 day in advance CD that you're getting does not always mean it's the final one that we get and you'll see at closing. There's a lot that goes back and forth between us and the lender, also including Jared, just to make sure that all numbers, there might have been small little changes at the time of for example, at the time of inspections, you didn't pay the inspector, but then you ended up paying them. So Jared didn't realize that, but then got a paid invoice later on. So then we change it. So those are things that will happen. So don't be alarmed. You will see some numbers change throughout, but we will work with everyone, and then you will get Jade is who our buyer client coordinator is. She will be the one that will be reaching out to everyone with the final CD, what you need to bring for closing, which super important things that we listed here. Bring valid ID. I cannot stress that enough. Get a cashier's check if your bank is not local. And you're doing a wire fraud is on the rise. It's continuing to get on the rise. I can't stress that enough. So if you're looking to wire, make sure you reach out to me or anyone at Universal, Jade, Jared, and Josh, just so that we can all coordinate together. The last bit of piece that you'll want to talk to is one of us, just to make sure that you verify those wiring instructions, because you will see scam emails coming to you saying you need to wire right now or else you're not closing on time, or sorry, we just changed our wiring instructions. Those are all fraudulent emails. So if get in touch with your bank way in advance, even before closing day. If your bank is not local and you can't get a cashier's check, make sure you call them and see what their process is for wiring or how to get a cashier's check. For example, PSECU, there's a branch downtown here in State College, but you can't do anything there. You can't wire, you can't get a cashier's check, nothing like that. So you have to get either a cashier's check overnighted, or you have to wire, and some banks require you to be in person. So sorry, I went on about that a lot, but that's super important and something that happened. Wire fraud is something that's been happening a lot in real estate transactions. Closing document signatures must match the names on the ID. So if you just got married and in this process, which happens a lot, or you're changing your name, you just decided to change your name, any of those things, we need to make sure that everything is lining up. Those are super, super important things that need to be addressed.
Yeah, definitely agree on the names piece. I recall a transaction I was doing 2 years ago where on all the documents, the borrower signed them like 5 different ways. It was like first name, last name, nickname, last name, first name, middle initial, last name, first name, middle name, last name, first name, middle name, last name, third. And came back, and then lender was like, no, you got to get all of these signed the same way with the same signature. And it was a mess trying to go back and get everything updated. So yeah, definitely have to stress that. So yeah, that basically is everything with the home buying process. So I know we threw a lot of information at everyone there. It looks like we have a question in the Q&A here. Brandy, how far in advance do you need cash to close? Before closing or at closing, regardless if it's check or wire? And you are muted, Brandy.
Sure was. Yes, the cash to close is needed at closing. Some title companies will require it 24 to 48 hours in advance, but we just require the check in or wire at closing. At least if you're wiring, I do recommend buyers to wire the day before, just because banks can have glitches and that could cause a problem, because if we don't have funds at closing sitting in front of us, we can't fund.
And I'll add to that from the lending side of it. You don't have to have all of your funds to close when you first go under contract. But before you get that clear to close, the lender is going to want to verify that you have the funds in your bank account for closing. So before you get that clear to close, you will have to, at that point, have your funds in your bank account ready to go. And then you provide that documentation to the lender, and then they will issue that clear to close. Now, you don't have to have the check itself, but you have to at least have the funds in your bank account ready to go before the lender will give you that clear to close. That is a great question.
Yeah.
Let's see if there is any other questions out there.
You are going to have a whole bunch of questions throughout this process. One, this was an hour, and the process to buy a home is usually 30 to 45 days. So just remember, we are here to answer. All of us have our cell phone number. This is the office number. My cell phone number is always available, but please feel free to reach out at any time with any questions that you have.
Yes, we do have one more question here. Caitlin Luzier says, I always love to hear any insider tips that each of you have. Are there any quick and easy ones you recommend? One that I know a lot of people aren't aware of is breaking your monthly mortgage payment in half, which actually can reduce the amount of years you pay on your loan. Caitlin, I think what you're referencing there is paying ahead on your mortgage so that you can pay it down faster. I believe is what you're referencing, which is something you can do to pay it down quicker. If you are able to make multiple payments a month towards your mortgage, that can help. Other things that you can do is, especially in this market with interest rates being a little bit higher than what we're used to, there's also opportunities in a few years as rates change to refinance, and as you gain more equity in your home, you can lower the monthly payment on your property by just refinancing and getting into a lower interest rate on the balance that you still owe. Brandy or Jared, any other quick and easy insider tips that you guys can think of off the top of your head?
If I can add one thing to the whole mix, it is super, super important that you think of us as your team. We working together as a team, the realtor, the loan officer, the title company, all three of them with the buyer, if they do not flow well or work well together or have the same end goal, which is you being happy in your new home, it's not going to go well. And I think it's super important to know who you're working with, and if the realtor is comfortable with them, the loan officer is comfortable with them, the title company, it makes the process so much smoother because everyone bounces everything off of each other, especially if something, because at the end of the day, there's not really you would love for every file to be a piece of cake, but it's not. And there's going to be little hurdles that we have to get through, but that's our job, is to take the stress away from you as the homeowner. And that's why having a good team on your side is super, super beneficial.
I agree. The last thing I would say is there are no dumb questions.
Yeah.
It's like going back to what I said, I'm going to ask a lot, what can I do for you like right now? Like what's most important to you right now? Because there's going to be things that you just want some clarity on. If it's not something that I can answer, I always say, I'm not an expert at everything. I'd love to think that I know a lot, but I don't know everything. So I like to point people in the right direction of who they need to talk to. If it's an accounting question, you want to talk to an accountant. If it's a legal question, you want to talk to a Pennsylvania real estate attorney. And if it's something that Josh can handle, you want to talk to the lender and vice versa. So there aren't dumb questions. It's better to get your questions answered when you have them. One of the easiest ways to do that is usually through email. And then that way it's recorded and you don't lose track of it. And you can kind of have like a detailed list of how that question process went. So.
And if I can add to that question thing, there's so many things that when you go in to buy a property, full disclosure to the realtor, to the loan officer, to the title company, because there might be something that you discussed with one of them that is not necessarily that their specialty, that maybe you should have a discussion with title company, like, hey, I plan on doing XYZ on this property, but there's a restriction in the title that doesn't allow us to do that. Or, hey, who do I talk to about this? So if you just buy a piece of property and never share with anyone what your intentions are, and especially if it's not just obviously to live in there and you have all these other grand ideas, if you don't share, we can't help. So that's where we all come in to help each other to get you to what you need.
That's where that deeds restrictions and zoning might come in. You can look into some of that stuff.
Yes, I would agree with that. The last thing that I would end with is that buying a house is, for many of us, the most expensive decision we'll ever make in our life. But part of that too is that if you don't get into the right loan product, it can be even more expensive. So that's where it really helps to, again, just shop around, talk to your bank, talk to a mortgage broker, see what loan programs you qualify for. Ask for some comparisons, because I could spend hours going over why one loan program is better than another for this situation or that situation. And the reality is that each piece, as I think of it, is kind of a puzzle, and you have to put those pieces together and see what picture does that make. Because each person is going to have different priorities and needs and things that they need in the transaction. So it really does pay to shop around and to see what your options are, and then what gets you either the best monthly payment or the best closing costs, the best long-term value for the house that you're buying.
Great.
Cool. That's probably a good place to wrap.
Yes, thank you, everyone.
Thank you, everybody.
Yes. I enjoyed this, especially just hearing from Brandy and Jared, who are just experts in their field. I just love getting to work with you guys and what we get to do here in Center County.
You too.
Likewise. Thank you, everybody, for coming and checking this out, and hope to see you down the line.
Yes. See ya.